Well, today was a great day. 6/2 of 2001. Market just closed. Time is 1:16 p.m. Silver, silver, silver. So we can see how that silver top got up to close to my price at 37, where that short would come into play again. The volatility gap here that we had on this little move starting out the days, we made the lows and then silver came back up. So this SLV range, well, it's not populating at the moment because the market just closed in the platform. However, the range on the SLV, let's pull the range up, SLV, and I would like to show that the money flow on the SLV was negative $77 million. I would also like to point out very clearly that the volume is at 58 million shares, where there was times that we were running at record volume here on those reversals back up at that $48 short that I gave out, was that we were running 140. We were running more volume here on this SLV than we were on the SP spiders. So the ranges today, the high short 36.29, 34.68 was the intraday low bounce right here. That's where we made a market back up here, and we kind of ended here. But let's take a look at where that silver reversal was. Net, silver remains weak and vulnerable within its price volatility. Silver will continue to be volatile, and it will continue to be between ranges, as I said, 31.88 pennies up to the higher side. So we can be from 31.88 on the low side. And if we do come back up and rally up toward the 37 handle and can close above that 38.50, then we're going to be in a range of the lower end to the higher end. And not only that, we'll take a look at the monthly range. Here, over here in 4-1, when we were pumping up here, I said that we would have a correction in silver. And we did. And we started out the month of May that way. And basically we broke those monthly lows. Then we levered back up. But look at this month right here. This month is only 2 days deep. However, that this remains vulnerable. That low here was 31.97. And the high here was 46, down to that 31.97 for you silver bugs. The thing about that you're going to have to worry about, and where I can find me an opportunity, would be at this blue line sometime this month. And if we come down and hit that line right here, that's called a 10-month moving simple average, this price would be $32.01. The thing about it is that the 10-day moving average is not descending in value. It's ascending in value, as far as what it would mean is that there's going to be a little bit stronger support because of it. And we understand it. The buying opportunity would be that you get one of these wicks down there to test that blue line with the limit order out ahead, and you get wicked in, limited in your entry, and then pop off of that. So it's a case scenario that we'll do with. I will tell people that once again the percent DS was at 94.92% when we said it must come tumbling down. The current weekly percent DS is also at 76.42. The higher that this percent level DS is also equals and equates to less short interest in silver. So therefore, when we take a look at the rising 10-month moving average is how we get hit down here, and this is where we would like to start buying here. And when we do come and get hit down here, we'll use a 3-minute, 15-minute, and a 60-minute chart, because it will have to bounce very quickly. If it only bounces a little bit off of that bottom, then we would have to exit, because if you sell through the 10-month, then you would have another capitulation down to the 20-month moving average. And once you break this $30 handle, which it's pretty much been able to stay above this area right here where it was resistance, if you break through that 30, and I've been saying it now ever since this top was, if you break through that 30, bam, you're coming down. And let us not forget that, once again, silver's been on fire since 2010 lows. The 2011 burn rate was a 90-day trade right up to that top. Everybody got straight up in it, and now it's straight right back down. So this is the near term that we're sitting on. Remember that this monthly chart is only 2 days old.